right, everyone, this is Vishal from EQUITY.GURU and welcome to Chart Attack. Today is that big day. It is the 16th of March, and we are going to be hearing from the Federal Reserve a bit later. I'm actually recording this the day before, so we're going to take a look at what's happening in the markets, in the bond markets, and I think, the US dollar. That's sort of the big one here that I'm going to be watching. Let's first start off by looking at the Fed futures. So for March 16th, you can see here pretty much 94.4% of the market thinks that the Fed is going to hike rates. So there is going to be a rate hike, 100% chance of a rate hike. The question is whether it's going to be 25 basis points. And believe it or not, there's 5.6% of the market here believes that there could even be a 50 basis point hike if the Fed is really serious about tapering inflation. And we heard the CPI for February came out at 7 point something percent, which is the highest in 40 years. And of course, a lot of people are saying that means the Fed has to quickly raise rates in order to get ahead of that inflation there. So, if there is a 50 basis point hike tomorrow, I think, today, because this is when the video comes out, if there is a 50 basis point hike today, I think it's going to get the markets a bit surprised. But we can say a 25 basis point is pretty much already baked into the cake. So what does that mean? That's the big question a lot of people are asking, because of course, with all that debt out there, raising rates isn't the greatest for, say, governments who are still going to be spending a lot of money and have actually started to spend more money because of the whole situation in Ukraine and defense contracts and spending more on defense in general. And then there's a lot of people saying, what about the consumer who is also in a lot of debt? What is raising rates going to do, especially when you're seeing inflation in oil and in food? And this is where it gets tricky, because now you're seeing a lot of forecasters saying, hey, if the Fed even hikes maybe a few times this year, they might have to start cutting rates, say quarter three or quarter four, just because there's going to be a recession. Because a lot of people are going to start saving money. They're not going to spend money with rising rates. So this, sets up this weird dilemma, because if the Fed, doesn't hike enough, then inflation is going to still continue higher. So what's the Fed going to do here? And this is, again, something we've talked about, I think maybe even a year ago. And this whole idea of central banks being stuck, do they go to negative rates in the future, right? Because there's so much debt out there in the system. I don't really know about that, but it's definitely, a very interesting period of time here with the US and Canada, getting a few pips away from zero. But generally, when there is a major recession, central banks like to cut somewhere between 2 to 3%, which is something, obviously we can't do anymore at levels like this. So it's going to get interesting to see what happens in the next major downturn or recession and what central banks are going to do. But don't worry, they keep reassuring us that they have the tools in the toolbox. So let's take a look at the markets and what this could mean going forward. And for the markets in general, you can read all my my articles on the technicals. We're still in this sort of no man's land where, yes, we are getting a nice bid here. We are seeing some support bids, but I'm not looking for any longs until I cross over the 4,300 level. That's just me. I like to look for these actual breaks, and that would take us above my resistance level and also my moving average here. So if the Fed is, going to hike rates, which I think, the market already has that priced in, right? So I should maybe go back a little bit, but the big question tomorrow now is going to be that forward guidance statement, right? How hawkish is the Federal Reserve going to be? Or are they going to sort of take a pragmatic approach, right? Where they might say, hey, because of the current situation in Ukraine, et cetera, we might have to, we might have to be a bit more pragmatic when it comes to hiking rates. And we're going to go month by month just to see how things are. If that happens, I think, the market's sort of looking at that as, oh, holy cow, more cheap money. So the markets might like that, right? I think they might like that a lot. Or if it's the other way around and the Fed is still very, very hawkish, then that might be a concern for some of the stocks here, especially tech, right? Because tech tends to do poorly in a rising rate environment. So I'll be watching the NASDAQ a bit more. But really what I would be watching, and this is what I always do when it comes to the Fed decisions, is that 10-year bond. So this is TLT, actually, the chart of bonds. And you can see here, bonds are selling off, which actually means that the 10-year yield is rising. So yeah, we did actually break out yesterday above the 2.05%. We are around 2.14%. So this is again indicating rising yields and rising interest rates. So keep an eye out on this and how this reacts tomorrow after the Fed. And then, of course, the most important one is that US dollar chart, which is the DXY or the DXY. And we warned our followers and readers way back in August, or well, September actually, because that's when the breakout happened here with our weekly double bottom pattern on the US dollar. And since then, we've been pretty much bullish the US dollar because the new uptrend has begun. We've had our first higher low. Could we be getting our second higher low sometime soon? And of course, if the Fed is more hawkish, that would show on that US dollar chart. But as of now, I think a lot of this dollar move is pricing in rising rates. The question is whether it's only 25 basis points or whether it's multiple rising rates going forward. So keep an eye out on the dollar chart, on that 10-year yield. And I'm going to be very interested to read about that dot plot and basically that press conference that Powell's going to have. You're going to hear a lot of questions regarding how many rate hikes are you guys doing this year? And it's going to be interesting to see how hawkish Powell is, because I remember in the last meeting, it was a bit different. He wasn't very hawkish. Some people said the statement was a bit dovish, and he sort of seemed like he was all over the place. So let's see what happens when we hear from Jerome Powell sometime later today. But that's it for me, folks. If you enjoyed the video, be sure to give it a thumbs up. Be sure to follow Equity Guru and all our social media links in the description box below. And I want to hear what you guys what you guys think about the Fed and rising rates and what's going to happen in this type of environment. Do you see the dollar drop, or do you see the dollar explode? Or if the Fed is actually trapped, do you think they cannot raise interest rates? I really want to know your guys' thoughts in the comments below. But that's it for me, folks. I'll see you guys all in the next chart attack.